Hey guys, in this episode, I'll be talking about whether you should get your investment property on interest only or whether you should go principal and interest. You're about to buy, if you're about to get your first or next investment property, don't know what lending strategy, don't know what lending structure you should be going for, then this episode will be super helpful. I'll be going through 3 pros of interest only and 3 cons of interest only, which are then the pros of principal and interest. Okay, so let's get into it. My name's PK, and I help people build passive income by using data without using a buyer's agent. Let's get into it. And if this brings you value, this is just raw, dirty, the mechanics of property investing, not the high level stuff that everyone's always interested in where to buy. I've done that video so many times. This one is just the raw, gritty mechanics. Okay, give it a subscribe, turn the notification bell on, give it a thumbs up, tag someone who benefits. So number one benefit of interest only is that it preserves cash. So interest only basically means that you have a 300k loan, let's say, and you're only going to be paying interest on it. You're only going to be paying interest on it, not paying off the principal. Okay, so the benefit of saying to the bank, hey, I want an interest only loan, is if you don't pay principal, then you have to pay less, right? You don't pay that much every month. And so you can buy huge positive cash flow properties. You can get positive cash flow on principal interest as well, but you can get positive cash flow properties. And if you're paying interest only on a monthly basis, then you're making passive income, you're making positive cash flow, and you're preserving your cash, you're preserving that flow of cash flow for your next deposit. Whereas if you were going principal and interest, you would be pumping that positive cash flow and then some back into the mortgage. And so it's like, well, where are you going to get your next property from? Where are you going to get that next deposit from? So for property investors who want to aggressively build a portfolio, they often, more times than not, go interest only because it preserves cash for your next deposit. The second benefit of interest only is the obvious question you're probably thinking is, all right, if I go interest only, then I'm only paying interest. Great, I preserve cash, but when am I actually going to pay this property off? Right? I'll get to that as well. And you're also thinking, can I go interest only forever? Or there's a certain period, right? You're right. There's a certain period you can go interest only. Used to be that you could go 10 years interest only, which was great. Now it's limited to 5 years or under. But here's the thing. You can roll over your interest only period. So let's say you go to ANZ. I'm not a big fan of ANZ. But let's say you go to ANZ through a mortgage broker. Always go through a mortgage broker. I've done another video on it. I'll put it as a card at the end of the video. If you go through a mortgage broker and you go to, let's say, ANZ Bank, and there you say, I want to get a 3-year interest only period, they'll give it to you. And come 3 years from now, you can simply go back to ANZ and say, I would like to refinance. I want another 3-year interest only period. And if your borrowing capacity is the same as what it was before, then they'll give you another interest only period of 3 years or 4 years or 5 years or 2 years or whatever. And then you can keep rolling that along. And if the bank says, if ANZ says, no, I'm not going to give you another interest only period, then you can just go to another bank, and St. George or CBA or First Mac, someone else will give you an interest only period. So you can keep rolling this interest only period over, thereby preserving your capital and building a portfolio, okay? Linking it to the first benefit. The third benefit of interest only is you actually make passive income, all right? So you're buying a 300, 400, 500k property, you're going interest only, you're making, $2,000, $5,000, $10,000 positive cash flow, passive income, clear of all costs every single year, which you can use to, as I said, fund the next deposit, or you can go on a holiday. I mean, not that you can these days anyway with lockdowns, but you can do what you want with it. It's positive cash flow. Your debt isn't increasing. Don't think that it's increasing your debt. You're simply making positive cash flow, all right? So those are the 3 pros, and obviously there are downsides, like with anything in life, to interest only. So the downside of going interest only is that interest only loans are generally a little bit higher in terms of the interest rate that you give versus principal and interest. Okay, so I mean, each bank is different. The month that I'm recording this in is August. the difference between interest only and principal and interest, let's say 2 years ago, was like 0.25%. Depending on bank, it can be like 0.5% now, sometimes higher. So, if you're exclusively zoned in, honed in, and, really looking at the interest rate that you're paying, then you should go principal and interest. But sophisticated property investors don't place that much importance on the interest rate they're paying because they want to grow a property portfolio. And there are things in growing a property portfolio, things within your lending strategy, which product, which bank to go with, interest only versus principal and interest, rollover periods, which tier of bank, so many things to go with that are much more important than the interest. Okay, if you go to a mortgage broker and say, I want the lowest interest rate, that type of loan product may inhibit you from getting that third or fourth property. Whereas if you just pay 0.25% extra, you might get a loan product that preserves your borrowing capacity with a bank, and then you can get that third, fourth, fifth property. Okay, interest rates are not all important, but that is one of the downsides. If you go interest only, you're paying a little bit higher interest rate as opposed to principal and interest. The second downside of going interest only is that you're not actually paying off the loan. Okay, so, it's like, well, you're making positive cash flow, you're preserving your capital, but you're never actually paying down that loan. But don't fret, don't fear. The whole idea is that once you've built your portfolio, once you have that requisite number of properties, then you can switch over to principal and interest and start paying your loan down. Okay, so that's the whole idea is in the acquisition phase and the accumulation phase and the building phase of your property portfolio, interest only is great. In your consolidation phase, once you have enough properties and now you want to look to pay that debt down, that is when you then pay principal and interest. Or an even better strategy is you let the properties pay themselves down. So very simple example, you buy two properties, 500K each, worth $1 million property portfolio now. They both double in 10 years, easier said than done, but let's just go with that. Each of those properties is now worth $1 million each, a $2 million property portfolio. You sell one of them, but a capital gains tax and all that good stuff. Use the profit to pay off the debt of the property that you didn't sell. You're left with a $1 million property debt-free. Just round numbers here, okay? So if you scale that up to 6 properties, sell 3, hold 3, scale that up to 9 properties, sell 4, hold 5, you can see how by growth, equity, selling that in the long term, harvesting that profit, paying off the debt, you can actually build a large property portfolio, multi-million-dollar property portfolio, without ever paying their mortgage yourself, without ever paying that principal yourself. The growth in the properties have paid themselves off, okay? If you didn't understand that, go just rewind and listen to that again. It might transform your approach to property investing. Like I did a video, I think a few weeks ago about, the top mistakes I've made on my journey to becoming a millionaire for whatever vanity metric that means. And then one person commented that, well, you're not a millionaire. You use the bank's money, right? So the banks are the ones who own your properties. That was true, right? I went interest only initially. That was true. The banks owned them. But with the right data, with the right growth, I was able to grow more and more equity. And now I own the majority of those properties, right? I have a leverage ratio of 22%. So don't think that if you don't pay off debt that the bank will always own them. You need to buy properties that grow, then you can either pay principal and interest off in the future or sell 1 or 2 properties and just wipe away all your debt, become unencumbered by debt, holding a multi-million-dollar property portfolio. Okay, but that is the second downside of going interest only. At least in the short term, you're not actually paying off any debt. The third downside of going interest only is that it can affect your borrowing capacity. All right, so if you're on your last property now, you're scraping another, 300, 400K in lending, you might consider going principal and interest, right? Because that might then open you up for another $100, maybe $200,000 of lending, right? So interest only in the bank size, they'll penalize you a little bit in terms of your lending. But once again, you have to put these pieces of the puzzle together. Don't just think that I want to maximize my borrowing capacity at the expense of cash flow, right? You could preserve your borrowing capacity by going principal and interest, but if you have no cash flow to then use as a deposit for your next property, what's the point in preserving your borrowing capacity? There's a lot of terms I'm throwing around, guys, so if this is making sense, let me know. And if you, like, the hard yards of property investing, this is the mechanics, these are the details that all the marketing companies, all the property investment companies, all the buyer's agents never teach you. These are the details that only you can learn off your own bat, off your own agenda, proactively. This is what you need to learn. If you have other videos or other topics that no one's really thinking about, no one's really talking about, producing content on, if you really have something you're stuck on, something that might be a silly question, but you just don't know, put it in the comments below and I'll make an episode about that. I'll create a video about that, because ultimately it's very easy to talk about where to buy, property market updates, all this high level stuff that gets the clickbait. But it's this lower level foundational mechanics of property investing that matter, right? It's like a Swiss watch, it looks great, but if the cogs aren't perfectly aligned up, it could look great, might even have a diamond on it, but ain't gonna work. So property investing is like that. You can pick the best suburb, but unless you get your lending strategy right, even if you pick the best suburb, you may not be able to get to the 4th, 5th, 6th property. You may not actually be able to get that 80K, 100K, 150K passive income, all right? And look, it's not a decision set in stone. You can always change your interest only policy up. You can go to principal and interest. You can revert back from principal and interest to interest only. It's not like a forever thing, all right? So hopefully these points are really helpful. So the pros of interest only: preserves cash. You can roll over the interest only period and you actually make passive income. The downsides is that you have a higher rate. You're not paying the debt off in the short term, so you need to have a long-term strategy, and it affects your borrowing capacity slightly negatively. But you need to put all these things, lending strategy, of which interest only versus principal interest is only one pillar. There's other things like whether you should go variable and versus fixed, and many other things as well, many other pillars that a lending strategy rests upon. You need to understand this. Let me know in the comments and down below what other videos or what other episodes, what content should I be producing so I can actually bring value to you guys. This video is probably not going to get 10,000 views because it's in the weeds, but I really think this is what many of you need. Okay guys, so if this is what you need, if this is bringing you value, hit the subscribe button, turn the notification bell, give it a thumbs up. The more times you give it a thumbs up, this video, it will reach more and more people and actually benefit them. My name's PK, and please join my Facebook group, free, almost 10,000 people there now. Lots of free education just like this. And if you're interested in audio only, there's a podcast link there below as well. Guys, I wish you all the very best. Always remember, the most important real estate is between your two ears. Catch you later.